All right. Good evening, traders. All right, so it is Sunday, August the 7th, 2022, approximately 6:29 p.m. All right, so I wanted to do a quick video to share with you this technique. Some of you may be familiar with it, some of you may not, but I was able to work with this technique and try it out over the past week. And I will say it is probably one of the more comprehensive techniques, strategies, whatever you want to call it, that I've utilized thus far. So just wanted to share it with you, and hopefully you can have some of the same success with it that I have had over roughly about 38 trades. So without further ado, I'm going to jump right into it, and I'll try to explain things in as much detail as possible, and be as comprehensive as possible. And as always, if you have any questions, please feel free to leave them, leave comments, questions, and everything on the YouTube channel, and I'll be glad to address them at my earliest convenience. Okay, so the technique. All right, so what we have here, so obviously we have our regular candles, we have our support and resistance zones marked out from the 15 to the 4 hour to the daily, and all of that good stuff, right? These are our regular candles. And then here we have our RSI. The settings for our RSI is going to be RSI at 12 for the length, and the SMA is going to be 9. So RSI being our thick white line right here, and our smooth moving average is going to be this thin gold line right here. And our settings are basically, this is our 30 line, our basically oversold line. Here's our 50 line, and then here's our 70 line. So 70, 50, 30, 70 being our overbought area. And then, of course, 50 being right in the middle, basically, right? And we're using our RSI for momentum to tell us and give us an indication of what the momentum and strength is in the market at the time. And we're going to use this in conjunction with our new technique here, or not necessarily new technique, but the technique that we're going to discuss here tonight. So the very first thing you want to do, obviously, right? We always want to do our top-down analysis to give us context as far as major market structure. Again, understanding, looking at the market from a holistic perspective, understanding where we are in the market from the daily or higher time frame perspective, because obviously that's where the smart money, that's what they're looking at, and the smart money are the ones that move the market. And all we're doing is, we're trying to ride the coattails of the smart money, those individuals, banks, and institutions that have the deep pockets, right, where all of us are aspiring to get to. All right, so we're going to look at the daily and see, again, give us context as far as where we are in the market with GJ right now at the current moment. So right now, as we analyze this, taking a look at it, and we'll do this as well because I want to get a really good look at this. All right, so as we look at this and analyze, so from a price action perspective, we see that price over the last week or so has started bouncing off. It really retraced basically off of this daily support area. And I love the way we have our supply and resistance zones drawn on here, right? So we see that price has come into this support area, this daily support area, a few times, and has retraced and is currently in retracement mode. So on the daily. So right now, according to price action, we are currently uptrending from the daily time frame. Right. So we're currently in an uptrend, meaning that buys would be where the big moves are for the time being. That could change. But for right now, we are currently coming off of a pretty strong bullish day from the previous trading session on Friday. It was pretty strong. And again, as price action will show us, we have bounced off of this daily support area once again, and we have multiple touches in this area. Even going back, a few months or so. So that's what we're currently at in the market from the daily. We'll take a look at it from the 4-hour again, just to get some more context. The market just opened, so it's Sunday. Everything is just starting or what have you. So movement, not a lot of movement, not a lot of volume and everything. So we see how right now currently prices coming up here and kind of bouncing off of this resistance area. But again, nothing to really pay a whole lot of attention to at the moment. We're not looking to put any trades in, but again, just for the context of understanding, where we're coming from in the market and where it looks like we're probably going over the next couple of days. All right, so when we go down to the 15-minute, take a look here. This is going to be our main trading time frame. The 15-minute is where we're basically looking to trade off of for the most part. And as we can see on this 15-minute, price is basically ranging for the most part between these levels right here or what have you. But understanding where we are in the market and context, we're basically coming out of this daily support area. So it looks like we have some more bullish movement to go. Not to say that price isn't going to range for a little bit. We'll see how things go once price breaks out of this range that it's in. But again, overall in the market, according to the daily, we're uptrending. So our bigger moves are going to come more than likely, from buys or what have you. Again, not to say that, there won't be any selling pressure or anything like that. So now that we have an understanding and context, we've viewed the market and know where we are from a major structure or what have you. Then looking at the momentum right now, we see momentum is we got some downward pressure, some downward momentum coming out of the overbought area. We got a bit of a cross at the moment or what have you. So in any case, what we want to do, so the technique is this, it's a really simple and comprehensive technique. Like I said, we're going to combine it with our RSI. So basically what you want to do is you want to go up here and you want to switch your candles. And if you don't already have it up there, basically you can go through your candle selection and you're going to switch your candles to Heikin Ashi. So let me explain to you what Heikin Ashi candles are. So Heikin Ashi candles are it's another way of doing your bar charts, right? So or candlesticks. It's a different way of doing candlesticks, and basically there's a calculation that goes into this candlestick, which is different from the regular Japanese candle. So if you didn't know, the regular candlesticks that we typically use, the default candlesticks are called Japanese candles. These are called Heikin Ashi and basically have a slightly different calculation. So for the regular Japanese candles, it's basically the open, the close. That's it. That's how the candle is calculated. The next candle that comes, the preceding candle of each candle with Japanese candles basically starts at the close of the previous candle, whether it goes bearish or bullish, it opens up from the close of the previous candle. Now, Heikin Ashi candles are not that way. Heikin Ashi candles have a different calculation, and the calculation basically goes, it takes into account the opening, the close, the high and the low. So it takes all of that into account, does the calculation, and then it divides it by 2. So basically what the Heikin Ashi candle is doing is it's giving you the average. So basically you're looking at the average price movement of the previous candle, which is going to give you the current candle. So what happens is the Heikin Ashi candles typically open in pretty much towards the middle of the previous candles, because again, the calculation is based off of an average of, you know, the price movement from the previous candle. So that's where the opening is going to be. And so the price movements and the price structure is a little bit different between the Heikin Ashi and the Japanese candles. So the Heikin Ashi isn't basically, it's not really necessarily showing you the actual price. It's a little bit off just based off of the calculation. Not to say that the movement necessarily isn't the same or what have you. But the important thing is, and what we're looking for in utilizing these Heikin Ashi candles is basically we're looking to clean up some of the noise. We want to clear up a lot of the noise that's in the market, right? And give us a bit more clarity, right? Because, you know, basically, you know, as retail traders, we react to the price action that's going on in the market. So this technique, again, is based off of, so one, you're going to change your candles to the Heikin Ashi candles. And what we're looking to do is, again, utilizing this technique in key areas. So when price is approaching key areas of support and resistance that we're tracking. And again, we're going to use the 15-minute time frame, right? So right now we see that price is in this 4-hour resistance area, right? So what we're looking for, and not right now, but just for an example, right? We're looking to see how price is reacting in this 4-hour resistance area, okay? And basically what happens is the technique is this. So if you look right here from this bottom move, and I'm gonna bring it to the middle of the screen a little bit, again, just to give some context, right? So price basically was bearish, right? It came down and it entered into this daily support area. And this was a multiple time that this wasn't the first time that it entered into this area. So what happens with Heikin Ashi candles, what you want to look for, one, Heikin Ashi candles are very good at identifying the trend. So basically there's no question what this trend is right here, right? No question at all. And so what happened is as it got to this area, notice that the candles got smaller, right? So the candles got smaller, which means the price movement started to decrease as we got into this daily support area. So that's going to be your first indication that there may be a shift in momentum coming in price as it's approaching and entering this support area. So now it has my attention. Now, one thing to note about Heikin Ashi candles is it has wicks. And typically it has wicks on one side or the other, just based off of the pressure that's going on. So when price is in a bearish trend, you want to see long wicks to the downside. So you want to see these wicks right here on the bottom when price is trending down. These wicks are indication of selling pressure, right? And so if you have a candle, you have a red candle with with wick, long wick, and no upper wick, that means this is basically all selling pressure that we have going on here. And that's really good indication of momentum in favor of this current trend. And it should give you confidence to stay and hold, if you have an order in, to hold that sell order for a longer period of time. So let's say somebody who got in probably on this candle or this candle, either or, right? Let's say if you got in, right, when this move changed and you wrote it down, right, to right here, right, you're looking at roughly, let's just call it 75. We're going to call it 75 pips for a good round number. So that was a 75 pip move from the time you would have got in this market right here to the time that you probably should have got out of this market, roughly a 75 pip move, right? And that's the technique. The technique is once I start seeing a shift, again, at key areas, key support and resistance zones, and we're just using the 15-minute as an example. I'm starting, so we have selling pressure. So the selling pressure built up some momentum, right? But then it started to lose momentum, right? Starting with this candle right here. And if you look, there's some top, a little bit of top wicks appearing, right? Which indicates buying pressure. So a little bit of buying pressure is starting to settle into this market right here. So now it has my attention, and I'm looking to see, okay, the market is probably starting to shift momentum. So what I'm going to do now is, once I start seeing that we have a shift in momentum, I'm going to go down to the 5-minute chart. The 5-minute chart is where I'm looking to actually enter and exit the market, right? So when I start to see that shift, I'm nosy. I want to get down there and I want to see exactly what's going on. So I'm looking at it from the 5-minute chart, right? And I want to get an indication, when can I get into this market, right? So we're in this area. Let's go back to the 15-minute real quick, just to make sure we're capturing the same area here. Okay. All right, so I think it was this one right here. So the time period, let's say we're looking at 5:30 or so. Yeah, this is when the market started changing structure right here. So we're looking for 5:30. All right, so we're gonna go down to the 5-minute. All right, we're gonna find that 5:30. Looking for 5:30. We want to make sure right here, right? So look at that. So look at what happened, right? So prior to 5:30, we started seeing a shift. We started seeing things change a bit. That market, that price action started to change a little bit prior to 5:30, right? Probably around 5:15, right? About 15 minutes earlier, right? So that's why it's important to look at the lower time frame, right? And this is, again, this is where we're looking to enter into this market based off of the 5-minute. Again, we're in a major zone. We're in a major zone, right? So we're looking at the price action to see what's going on. So we see that price, the action is starting to shift. Momentum is starting to shift in this market right here, right? So we see we got multiple candles, right? So the technique is, what you want to do is, so this starts to get your attention when you start to see the action, the price action starting to change, and a shift basically at your key areas. It gets your attention. Now the move is this: when you see your first candle color change. Now this one right here is pretty strong. This is a pretty strong indication, pretty strong candle, to look at to enter into this market. I'm on the 5-minute, right? So once I get this candle right here, right, and I see that there's no lower wick, I guess it exhausted out. The selling pressure exhausted out, somewhere around here. So we got buying pressure, right? And then the other thing you want to do is you want to look at your RSI as verification. So we're going to look at this for some confluence, right? And what we want to do is look and see where the momentum is. So if momentum is in your favor, basically we have up momentum. We got buying pressure momentum on the RSI. This is your entry candle. So we're going to enter this market right here, right? And you're going to hold this trade until you get the next color change. Until you get the next color change or indication that there's a color change. And you also pay attention to, you also want to pay attention to the wicks, on the top or the bottom side, or what have you, right? So as price, right? So we're looking at it, and we got this one right here. We verified it with our RSI, so we get in, right? So basically, this one took us, before price change, we got a good 30 pips out of this move right here. We got a good 30 pips out of this move. If you would have held it from the time you got in right there to about right here, where you probably would have got out. Again, paying attention to this resistance zone right here, probably a good take profit, again, given the timing in the market on a Friday afternoon, right? So a good 30 pip move. right there, if you would have got in, held it until you got that color change, or until you got to that resistance area, which would have been a good take profit, right? And then as you see on the next candle, we got a momentum change. And again, you can do the same thing, right? We got a color change. So I'm gonna take my profit off of this buy move right here and go ahead and put a sell order in and then ride the market right back down. Ride the market right back down. I got a color change. I got a color change on the candle, the Heikin Ashi candle. I got now notice you still got some buying pressure right there, right? Lots of selling pressure though, but you do still have some buying pressure right there with that upper wick. So that's something to keep in mind, but also look at the momentum, right? So we got a cross right here. Momentum is basically in your favor. And it kind of started, right around here. So between these two candles, momentum did start to shift, even though we don't have any, we don't see any indication of selling pressure with this candle. But obviously everything shifted at this point right here, right? So that's basically, honestly, that's it. That's really the technique right there. Again, getting context, understanding market structure, looking at what the market is doing on the higher time frames. Oh, look at that. As I'm talking, we got we got some downward pressure wick right here. Or candle, Heikin Ashi candle. So this downward pressure that we're currently seeing is continuing in the market right now. So a good example of taking this trade, holding it until you get a color change and in your candles. So again, that pretty much proves the point there. So right now we're looking at roughly a 25 or so pip move so far. Not bad, right? So again, that's the technique. That's the technique. And so what we're looking at, again, let's go to the 15-minute because we want to get context, right? I don't typically look to trade the Sunday. I don't look to really trade Sunday because the market is establishing itself. Just keep in mind where we are overall. In with our market structure. So as price has come down here and bounced off before, look for it to continue to possibly do the same thing. We're probably not looking at any breakouts to the downside. Again, it's possible. Price is currently ranging. The price can break out to the upside or the downside. It could do either one. So just keep an eye. And remember that on the higher time frames, we are looking, especially for, we are looking a bit bullish. We're looking a bit bullish according to our Heikin Ashi candles. Now let's change that candle real quick and see what we're looking like, right? Yeah, so on the daily, right? So this is the daily time frame. So the daily on the daily chart, we're not really it's kind of undecided at the moment, right? It's a bit undecided, but we changed that to our Heikin Ashi. Heikin Ashi tells us something a little bit different. Interesting, right? Interesting how that tells us something different. But also look at that momentum right there. Look at that momentum. So interesting. And this is the daily. Keep in mind, this is the daily we got. If we're looking at it from a purely price action perspective, and looking to see what happened, we had 1, 2, 3 green doji candles so far, right? So this was a pretty good bearish movement on the daily time frame. But it looks like the tide and the momentum is shifting on the daily, right? So again, look for our bigger moves, for at least the next couple days, the next day or so, to be bullish. Look for us to, come up. Look for a come up. We got 3 green candles, good indications. We got good momentum to verify that analysis right there. So let's continue to watch and see what happens. See if there are opportunities for us to get into the market and get some pips. More than likely, the plethora of the pips should be to the upside. But the market can consolidate and look to, if you're going to trade a breakout, make sure you trade it the right way. Let price break structure allow price to break the current structure first, either to the upside or the downside. It can do either or. Just have a plan, right? If it breaks to the upside, have a plan for that. If it breaks to the downside, have a plan for that as well. You can either, once it breaks structure, wait for it to close. Remember, the important thing is you waiting for an actual candle close out of structure, right? Outside of structure, whether that's to the downside or the upside. You want to let a candle close first to consider that a good break of structure before you either bullish or bearish on that particular move, and you looking to trade that breakout, right? The breakout is more verified when you get a pullback retest of the structure that was previously broken, right? At that type of trade is stronger when it's verified by a retest. So you let it break, let it go a couple candles, then it comes back and do a retest, and you can really take these Heikin Ashi candles, and they're going to identify for you again your pullbacks. When the pullback has ended, has pretty much come to an end, the Heikin Ashi candles are going to give you that indication. That's one of the things that we look at, right? We're like, man, when is this pullback going to end? Is this a pullback or is this a full reversal, right? But the candles, the Heikin Ashi candles, are going to give you those indications a lot sooner than your regular candles. Again, it's going to take out a lot of the noise. Not all of it, but a lot of it. And again, we're utilizing the RSI as well for additional, verifications, to what we're looking at in our technical analysis. So again, you can trade that breakout, but the stronger move to trade a breakout is to wait for the retest. When you get that retest, and all indications are we're going to retest and we're going to continue in the direction of the trend, then that's a stronger move right there. But trade it. You have options. Trade it as you will. We just don't know when price breaks out how far it's going to go off that initial break, right? We just don't know, right? We don't know how many pips, but there's a good chance that if you get a pullback and a retest of the previously broken structure, and that retest, everything's a go for the continuation, you can pretty much say that you're going to get a bigger move out of a retest when you have a break, of structure. You're going to get a pretty big move for the most part out of that next after that retest. So that's a good way, best practices when it comes to trading breaks, when it comes to trading break of structure, breakout trading. Okay. Well, that is it for the evening. I hope the content has been educational. I hope you've learned something. I hope I have not, left many questions for you. If so, again, please feel free to put them on the channel, and I'll look to address them, when time permits. But as always, I wish you happy trading. Feel free to test this technique out for yourself and demo, see how it works for you, see if you're able to apply it. Refer back to the video, look at other YouTube videos, on Heikin Ashi, read a book or two regarding Heikin Ashi trading strategies and techniques. These I bring these things to you all as I find them to try to help assist you in your journey. But I want to encourage you to do your own research, do your own tests and everything to see how things work for you. The way that I trade, that I utilize the Heikin Ashi, the way I just explained it, may not work for you. But find a way of doing it that works for you best. Again, like I said, me personally, I've had some pretty good success with this particular technique that I've just shared with you all. So I hope that you have similar success. Honestly, I hope that you have even more greater success than I've had so far, utilizing this technique. So as always, happy trading. Good luck to everyone. God bless and Godspeed. Thank you.